Yo, what's up, everybody? It is Tuesday, September 27th. So we had a mixed close today. Dow was down again. S&P down slightly, but it did make a new low, and the NASDAQ was up. I got to tell you, I'm a little bit shocked by what's happening with the fiscal. Yesterday was another drain, 8 billion. So we are now at 154 billion drained for the month of September. We had, last week I was saying, hey, we're starting to see the recovery begin. We had those 2 days with about a 15 billion net positive flow, and so that brought the deficit, that brought the drain for September down from 146 billion down to 131 billion. I said, well, at least it's a start. And then boom, we got hit on Friday with a 15 billion drain, and then yesterday we got hit with an 8 billion drain. So now the total drain from taxes for this month is now up to 155 billion. 155 billion. So we are nowhere on the road to recovering this drain at all. As a matter of fact, it has gotten worse, something I did not expect to see. We still have Friday. I keep talking about Friday. That's the day when we're going to get the normal first of the month. That's the big payments day that includes, Medicare, Medicaid, military pay, veterans benefits, disability, all that stuff that tends to go out on the first of the month. That's going to be a net positive 65 billion. But I tell you, it's been rough, and I don't know, today's market action that we actually got a positive close in the NASDAQ. I wouldn't be surprised when we see the daily Treasury statement tomorrow that today was a net positive flow. All right, but I mean, this has been a much larger drain this month than I anticipated. Much larger. And I really don't have any explanation for it. Like yesterday's drain was 20 billion on employment and withholding taxes. Look, that's another thing I should mention, because I track the daily flows in employment taxes, because that's kind of a proxy, or that's a bellwether for what's happening on wages. And that, that bottomed out around the end of August, I think around August 30th, and that's starting to trend higher right now. So, that's kind of like a positive sign. I mean, if it says that we're seeing wage growth, okay, earnings growth, and that's positive. We saw some good economic numbers today. All right. Consumer confidence came in at 108. The forecast was for 104. August number was 103.6. So that's trending higher. We also got numbers on new home sales. Get this. New home sales in August jumped by the most in 2 years. So this is another sign, or another piece of evidence that the rate increases by the Fed, they're having very little impact on demand. All they're doing is raising prices further. Every time you raise the rate, you raise the general price level. I mean, it's costlier to buy a house now because you got to factor in the monthly payments. That effectively raises the price of the purchase. I mean, it's just across the board. I've said it a million times that the cost of credit is reflected in the cost of all goods and services. What else is going on? Hurricane Ian, for you folks who are in Florida, be safe, especially if you're there on the West Coast, up around the Tampa area, or if you're in the Keys. I was watching a live webcam feed from Key West, and I don't know how far the eye is from there. It looks like at least a couple of 100 miles, but it's blowing down there. So be careful and be safe. Now, one of the other impacts that are going to be felt from this is that the major oil companies are shutting in production in the Gulf. That means they're shutting down production in the Gulf. So we could see, we were starting to see a bullish reaction in oil. And I suspect, depending on how long this hurricane lasts there in the Gulf, and how much disruption we're going to get from that in terms of oil production, we could see for the next few weeks some serious inventory draws in crude. So we could be bottoming out down here. Now, I think I mentioned that for the last 3 weeks we have seen producers, they've been net sellers of futures. Okay, and this is kind of out of the pattern we've seen from them over almost the last year, about the last 10 months, where they've been net buyers, and particularly they've been net buyers when the price goes down. Now they've actually been net sellers when the price goes down. It's been their selling probably that has been pushing the price lower. So that has been a change in their pattern of behavior, and I do follow them almost religiously because that's a very savvy group there. I get that data from the weekly CFTC Commitments of Traders report. So they've been net sellers. They're still net long futures. They've been net long futures since for over a year. I think since August 2021. But they have been paring down that net long position. I think now they're the least long since mid-June. Okay, so they've been selling lately, and if they're selling, I want to basically sell the rallies. But I think that right now we could see a bounce from the effect of the hurricane, and over the next couple of weeks we could see some pretty good inventory draws. The other thing I would remind you is that at the end of October, these releases from the Strategic Petroleum Reserve, those are going to end. All right, nobody's really paying attention to that right now. Okay, we still have a month to go, but this whole oil situation, it could snap around big time, as we get into November and December and really into the winter. By the way, speaking of oil and energy, I don't know if you saw this, but the Nord Stream pipeline, which runs under, was it the Baltic Sea? It's got holes in it, and there is massive gas escape from the pipeline in 2 places, and there's talk that this was sabotage. These are big holes. In fact, the gas plume that's rising to the surface, I read, is like over 1 kilometer wide. The gas plume, the bubbles coming up from this from the pipeline. So something fishy going on over there for sure. But I did not see, there's been no bullish reaction in natural gas futures, at least not today. Actually, they were down. But keep your eye on that energy. It's been quiet. Prices have come down. Haven't really seen any mention of this by anyone at the Fed, and that's the thing. And I spoke about this, how Jeremy Siegel, professor at Wharton at University of Pennsylvania, he was all over this last week. I never saw this guy so fired up. He was really, really angry at Powell, because he said at the least Powell could do, because Powell's saying, these rate adjustments, there's a lag time before we see any impact. If there's a lag time, and you've increased it 5 times, I'm paraphrasing Jeremy Siegel right now, then give it some time to work, or at least, you can mention or cite the fact that we're seeing falling commodity prices, not necessarily across the board, but in important commodities, in energy, etc., in the grains. No mention of this, just doubling down on extreme hawkish talk to scare the markets. And again, look, none of this stuff is having an impact on demand. None of it is having an impact on demand. And the reason for that is, again, these are fiscal expansions. Rate hikes are fiscal expansions. I mean, you could see this in the numbers. Right now, the T-bill discount alone has added $40 billion in interest income this year. $40 billion over last year. We're positive in interest on Treasury securities. It's like a positive $3.5 billion, which doesn't sound like much, but it was a negative $17 billion prior to the beginning of the rate hikes in March. So we've had a $20 billion swing in that. And this is just getting started, as I've said so many times, because you really, the government securities outstanding have all different maturity dates. So as they mature, as each security matures and new ones are issued, they're going to carry the higher coupon, which means the higher interest payments. So this fiscal expansion via the interest channel, that's just going to continue, and it's going to become greater and greater and greater. Okay? And we're not seeing any negative impact to demand, and there's not going to be any negative impact to demand. What will negatively impact demand is the damn taxes that are draining out, balances. Again, I get back to this month, 155 billion drain. That's way more than I anticipated. And so, what's Friday? Friday is going to be the 30th of the month. We'll see a 65 billion, which will still, that's going to bring us still to 90 billion net drain for the month. And you got to recover that. You got to recover that, and you got to add to it. And yeah, I should, speaking about adding, I should add this, that there's a chance of a government shutdown on Friday night. I mean, these fools over there in Congress, we go through this every single time when the continuing resolution runs out and they don't have a budget and they got to come up with a new continuing resolution, and then they can't agree, and it comes right down to the wire again of another government shutdown. Like, we cannot afford right now, with the way this month has been, so negative with these drains. I mean, you're just sucking out the financial balances of the private sector with these tax drains. And now with the government shutdown, it won't impact all payments, but you don't need to have all payments impacted right now with the level of fiscal, like just barely enough to keep the economy in a positive growth mode. So that's another thing we got to be aware of, that could happen by Friday night. And if it does happen, it's just, you just can't expect the market to rally under these conditions. I mean, you need these positive flows. We need these positive flows. That's what's going to cause the economy to, pick up. And if the economy picks up, the stock market's going to reflect that, regardless of where the interest rate is. I'm telling you, regardless of where the interest rate is, you don't sell growth. But right now, we're flatlining again after 2 quarters of being negative. I mean, you need growth. So that's the update for today. All right, everybody. Don't forget, check out my report, MMT Trader. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. There's a lot more information. If you're a subscriber, I send out, many, many emails during the course of the day about particular markets and things to do and things to watch out for, etc., etc. All right, see you tomorrow. Bye.